Lou Basenese with me for the hour to cover these markets. Are analysts too conservative?
They are. They should follow that Mark Twain adage. It's better to keep your mouth shut and be thought a fool than open it and remove any doubt. Because I tell you, for 3 quarters in a row by my tracking, they've been underestimating earnings growth by at least 30 to 40%, expecting 5 or 6% growth, and then S&P 500 companies post 10% plus. So this quarter, they only expect 8.3% growth. I think we get another double-digit growth, which drives this market higher. This is the key fundamental above predicting where stock prices in the markets are going. It's earnings growth, and it's never been better. I mean, you're talking about optimism is back. It's back for these companies. It needs to get back there for these analysts. They're too conservative.
They hate to be wrong.
There's no reward for being right, and there's no, they don't want to be. They avoid being wrong.
All right, you stay with me for the hour, please. Lou Basenese has brought along his stock picks, and he's very much into the healthcare area. His first pick is SPDR, S&P Biotech.
Yeah, it's a biotech ETF. Look, everyone wants the upside of biotech, but doesn't want the risk of a drug failure or an individual company. This ETF gives you exposure to 150 compelling biotechs. They're not just lottery tickets. The #1 position in here is Revolution Medicine, which is hitting all-time highs on Merck's potential buyout. But it's also got companies like Halozymes that I talked about before that's trading at 9 times earnings, doing a lot of revenue, and very safe. So this is an easy way to play the building momentum in the biotech space. These are the companies that are developing life-saving drugs and treatments of tomorrow that are going to be approved and acquired because Big Pharma has $180 billion worth of drugs coming off patent in the next 2 years. So they have to replace that revenue. The best way to do it is to buy the companies that are in this fund here.
Oh, I see. I understand that. Apple, you like them?
Yeah, I love Apple. I'm an unashamed fanboy forever, since $40 a split-adjusted share. But here's the thing. Everyone wants to keep dogging Apple for getting in bed with Alphabet to do their AI. Like, that's a bad thing, that they're outsourcing the brains. But this is what Apple has always done. They don't develop all the technology in-house. They've done it for Wi-Fi chips with Qualcomm, with their radio front end with Broadcom, with Corning for their glass. They find the best technology and create the best user experience with it. So I don't think it's a bad thing that Apple doesn't have its leading-edge AI built in-house. I think it's a good thing. Stock should, I believe it goes north of $300, new all-time highs. It's a long-term ride-or-die stock for me, just like your Microsoft.
And Apple's the one tech stock that I've never owned. Not once.
Really?
Not in my entire life, no. Well, Ford Motor Company reaching $13.91 per share. They are talking with the Chinese EV maker BYD. They're talking about a deal where BYD would supply batteries for some of Ford's hybrid vehicles. That's because the EV market is flaming out. Lou, Ford started to go up when they got out of EVs.
Yeah, no, I like Ford here. I'm not usually one that invests in the automakers, but Ford's up about 40% since the April lows. I think a smart move to get away from EVs and into hybrids, because consumer preferences have showed they'll buy hybrids. They make sense. They're economical. You can get good supplies. I think this is a smart strategic move. Still trading at under 10 times forward earnings. So not an expensive stock, but momentum on its side for sure.
Fascinating. Thank you, Lou.